This is our Forex blog for May 18th, 2011. And like most days, you want to buy the strongest pairs versus a week. The yen was very strong today and the dollar until about 9:30. And you want to trade those against some of the weakest ones. The weakest one was the pound, and the daily, weekly, monthly trend was down. So basically, you want to look to sell the pound yen, and you want to sell the pound dollar. Let's start with the pound dollar. And we're going to add our new FX IntelliTrend Fast and remove the Trend Intensity Pro, which is also a great tool, but it tends to be a little bit lagging compared to the new one. FX IntelliTrend Fast is a great trend tool that averages 4 of our statistical trend tools together into one reading. Whoops, hold on a second, I have put the wrong one on there. Alright, so zooming out here today, you can see this started to show weakness way back at 2, and it was above the hourly. So when price is above the hourly, you don't know if it's necessarily going to break that. Notice our trend reversal signals also predicted the high. They predicted this market here to stall. Obviously, this was the weakest one today. This signal failed. This one, if you would have got into a little trade, which I did, and made, I think, a pip on one of the trades and 10 pips on the second one, and then I got back in again at 23 and scaled back in somewhere down near 10 and got out of it, unfortunately, a little bit too soon here. But the trend reversal signals, especially in use with our tick charts, are wonderful. What I want to focus on today is using the IntelliTrend Fast to let you see the real-time strength. This one broke down and then shot back up, came back up to the hourly, which oftentimes is a resistance area coming to it from below, and the support area coming to it from above. And price, the strength disappeared here, and so you go short. And notice, it just pretty much stayed red all the way down, and the weakness was extremely weak until about right here. So you might have got out of that trade there. Short at 37, out at 88, for about a 50 pip. And when the market's underneath the lower containment band, most of the time it, within 30 or 50 pips finds some support and gets a bounce. This one made another wave down, which if you drew your fibs on it like I did, showed you the next area to get into it at. You can see, the 20 area and 10 area, which I said in live class beforehand and called out when I actually took the trade, was a great counter trend. Anytime the market's this far underneath the lower containment band, usually get a 20, 30, 50 pip bounce. Let's look at the pound yen. I'll just type it in on this chart right here. And here's 2 Fibonacci profit target levels I drew on my charts last night, and they show up on your charts today. This one acted as support for almost 2 hours, and then it broke down and hit the next one. I was looking at this chart, didn't take the trade myself, wish I would have. It was a much better trade than the pound dollar, and it shot up much faster. But earlier today, when it broke underneath the hourly, you can see it shot up there initially with some strength. That strength disappeared on that bar, and then when the price started to go down, you go short, and it stayed weak until about right here. You might have got out of that trade. We have the 10 and 20 day moving average there. When it broke down again, your next profit target's the lower containment band down here in the Fibonacci area, and it just went straight down. You see red every bar. This is a real-time tool that shows statistical strength or weakness on each 5-minute bar. So anytime it stays red, 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 you stay in the trade. You want to tighten your stop because sometimes they shoot up and and you get stopped out. But you would have made probably 30 or 40 pips on this trade. It has a pullback up to the weekly pivot here in the 10 and 20 day moving average. The first bar up has tremendous strength. The next bar has 1/4 the amount of the strength. Nothing. Trends down. It was extremely weak before. You go short right here, and then on the way down again, you can see the weakness is there. And we know today that the pound was one of the weakest currencies, and the yen was one of the strongest. And this is pretty much as no-brainer as it gets. And this last move, went down 70 pips. So whether you made 30 or 40 the first time, 50 to 70 on the second time, phenomenal. And then you might consider looking to buy here. Usually you want to wait for a double bottom. Maybe when it was going sideways and there wasn't that much weakness, you got into this trade right here and you got stopped out. Usually if you get stopped out, and you want to wait for it to go above the sideways range high before you get in again, and it never did. Came back down again to the next our trading zone area, likely low. It's way underneath the lower containment band. The weakness falls off again, so you go long right here, and I'm kicking myself right now not doing this. And it shot up from 93, to 30. This is about a 40 pip move in 20 minutes. Phenomenal trade. And after that kind of big move down, usually you get a two-wave pullback up. This, by the way, is one of our Elliott two-wave system. You have a strong trend down, and then you have a two-wave counter-trend move right to the fib level. And with the new IntelliTrend Fast, it enhances this system, because if it hits the fib target with a lot of strength, you don't want to short it. Once that strength kind of falls off, you do. So you would have shorted it right here around 50, and you can see it kind of pulled back. This bar right here didn't have that much weakness. Maybe you got out of the trade here at 38 for 10 pip profit. But, 10 pips add up. Let's look back to the currency meter for some other trades. Compared to the pound, the euro wasn't nearly as weak as the pound. The daily trend and the weekly trend was up. It started to have a little bit of strength here at 10, and the yen was weaker than the dollar at the time. So let's look at the euro yen coming up to 10. And this is the one where our trend reversal signal absolutely nailed the low within 5 minutes. Let's add the new IntelliTrend Fast to it. FX IntelliTrend Fast histogram. So this is a trend reversal area, and it was extremely weak on that bar. And then the next bar had less weakness, the next bar had less weakness. At that point, the downtrend's very possibly over, and it wasn't nearly as weak as the pound dollar or pound yen. And so you buy the breakout right here when it goes above those bars highs. And initially it doesn't have that much strength, so most of us might have, let's draw that again on there. Most of us might have got out, at the first sign of it pulling back, maybe somewhere around here at 61. That's about a 20 pip profit on that trade. And you can see as it was kind of sitting here, kind of into a little wedge pattern. I'm not sure how many people actually would have taken this trade, because the hourly moving average is usually the resistance area. But if it breaks that, the next profit target is all the way up here. And it wasn't super strong on the way up earlier. So I personally would not have taken this trade. But once it broke out, it was a lot of strength came in. One trade that is a good trade is once it goes from below to above the hourly and you see that kind of strength, if you get a little pullback like this with no weakness, this is a very high percentage winning trade, and you can see it shot up 17 pips, and there's really no reason to even be out of this trade yet. So who knows how much more it'll go. You might want to exit half the trade if it kind of goes sideways or pulls back. The second half of the stop would be right underneath the lows here. But that's an excellent type of a trade. The Australian dollar, was pretty weak today, not nearly as weak as the pound. So you could have also looked for Australian dollar and Australian yen sells. I won't put the other tool on there, but you can see once it broke underneath the hourly, you might have had a small profit here, a nicer one here, pullback trade right here. And actually I am going to put the indicator on there, because I would bet $500 that this counter trend trade up ran out of steam on the second bar here, and you would go short, and it would have probably kept you in all the way down here as the weakness returned. I didn't really watch this one too much today. Alright, so it broke down, and notice extreme weakness here. And then on this bar right here, there was a big bar up, so obviously there's going to be some strength on there. This next bar, which looks somewhat bullish on the chart, actually not only didn't have green on it, it actually was slightly red. So even better than I anticipated by looking at the chart, the price pattern. You're short, and then initially it starts to fall, and there's not that much weakness for a few bars, and then there's a lot of weakness, and it runs out of steam right here. You want to get out of your trade, or at least tighten your stop. 86. You're short at 10. This is a 20-something pip move. And those are the kind of trades that you want to find. This one also broke from underneath above the hourly later on, with a lot of statistical strength on the way up. The pullback had a little bit of weakness, then the weakness disappeared. And so when it starts to break out of that little sideways range, you go long again with your stop underneath here. And initially there's not that much strength coming in. It's kind of up a little bit. You know, you're up 7 or 8 pips. Probably going to get out of that trade right now. It doesn't appear to be working, but you know, pips are pips and they add up. So don't, you know, be happy with 3 to 5 pip wins when they come, and sometimes you get 10 to 20 pip wins and so forth.